All right, monthly chart. Suspension block. We've been testing it 4 months in a row. Just like SWAT, the more times this is tested, the more likely it will be to fail. For now, I'm marking this as the dealing range. Long term, first target would be here. Low hanging fruit would still be in this range. If we do manage to really start dropping to the downside, then I'll use the more traditional method that we're taught, which is this low to that high. But that's going to target the bodies for a low hanging fruit objective, which seems a little bit much at the moment. Quick look at the monthly PD arrays on the weekly chart. Pull off the monthly drawings, put on the weeklies. There's a suspension block down here which overlaps with this wick. As far as watching the wicks, keeping on this one first, look for its midpoint. This one, and those are pretty close. Followed by that one, followed by that one, followed by that one. Other PD arrays, weekly suspension block. So you have volume imbalances you can use above and below this candle. We won't be getting back to the highs, but if we did, keeping on that order block. To the downside, this would be the first wick. Midpoint you watch. Then this guy. And then this one. There is somewhat of a balanced price range in here. Which would act like support or resistance, especially when it overlaps with other PD arrays or dealing range price levels. Daily chart with the weekly PD arrays. Switch over to the daily drawings, and now it starts to get quite busy. Note the new week opening gaps. And the new day opening gaps. Extra close attention to the cluster areas. Where the new week and new day opening gap levels overlap with the PD arrays, our extra areas of focus. Here are the day chart dealing ranges. Short term, low hanging fruit objectives to the upside. Longer term, potential targets. Unlikely unless we really get some bull narrative going. Good idea to keep an eye on these price levels as we roll over. Last week's high respected the volume imbalance. These days respected that fair value gap. These bodies respected that wick. Suspension block. Everything has been staying well below the midpoint of that. So this will act as resistance until we power all the way through it. Most likely get a big candle like one of these if it's going to fail and allows it to the upside. Down here, daily volume imbalance from November. It's been respected quite nicely. This wick shows up if you change the settlement. Everything respecting it as well. Just messy back and forth, high resistance, price action on pretty much all the time frames. Difficult for everybody. Hourly chart. Before the PD arrays go on, it has been using the opening range gaps quite nicely. So Friday's opening range gap, wicks respect it, bodies respect the upper quadrant. Tonight's price action. Friday came down and used Tuesday's new week opening gap. Bodies respected the upper quadrant level, rallies up. Thursday, bodies respect Wednesday's opening range gap low and Tuesday's larger opening range gap, same quadrant level. Overnight pulls back up. Wednesday respects the high of Tuesday's opening range gap, rallies up. Even when it pulls back down, fails to reach this price level. Tuesday, you have to go back quite a ways. So it stays just above the low of February 6th opening range gap on the 17th. Friday the 13th respects the 6th midpoint of the opening range gap. Anyway, pull in tonight. I started watching price action during this candle. New week opening gap. Up here, overlapping with the high of Monday's opening range gap. This is the draw I'm looking for, as well as this cluster up here. We're nearly 6 a.m., so we're an hour past the end of London kill zone, still well within the London session. I'm looking for it to pull back against the London run up. And then at the opening bell or soon after, target the midpoint between our open price and the high of the opening range gap. If it continues running up, look for a gap closure and possibly near these highs. Hourly PD arrays, February 5th, fair value gap on the hourly chart. Sunday open, 7 p.m. fair value gap. Thursday, February 12th, overlapping with these new week opening gaps, has been respected. February 6th, February 5th. "15-minute chart for tonight." I started watching price right in here. 5-minute fair value gap. We'll see that on the next chart. 15-minute suspension block. Saving this for the future. It hasn't come into play yet. But if we drop hard during the pre-market session, I'll look for that if we break below these lows. During this run up, respected this 15-minute fair value gap during the 2 a.m. macro, and we held until the start of the 4 a.m. macro. Consolidation near the lows. That wick, come back down, comes up, doesn't make it to the midpoint, that's weakness. Bodies are lower than that, another sign of weakness. And right in the middle of the 11 p.m. macro, starts to move lower, takes out this sell side liquidity, which is the swing low. Small bounce, comes back down, takes out all of these lows, forming the low of the Asian session. Rally back up, respects this wick again, pulls back. This candle closes, creating this fair value gap. This candle here would be your entry to go long. First target would be taking out these highs, which is also pretty much the 20-point target as well for a scalp. Next would be that. And then you start working your way back up this chain here. This being delivered quickly to the downside, you're going to look for price to move in a similar fashion back to the upside, which we get. Big move here, big quick move here. Five-minute chart. Here's your entry long using that 15-minute fair value gap. Here's your 5-minute fair value gap. Tests it, respects it, tests it, respects it again. You could enter long here using the new week opening gap, draw up here as your reason to go long off of this fair value gap. Look for it to draw up towards that price level. Since we've come down, it's respected the opening range gap and got pretty close to these new week opening gaps. Also that aggressive move down with Asia. You already started to get a decent move up with London. Go long here, expecting continuation higher. After London's run up, look for the morning session to pull back against London, and then the first 30 minutes after the opening bell, look for price to go to the midpoint of the 9:30 open price and the opening range gap high here, possibly continue up to close in the gap or get close. If it gets close and does not close, bearish sign. Otherwise, close the gap and probably run up a little bit higher to get close to or take these highs. If you did not take this entry on the lower time frames, here's the other two setups that form. On the 1 minute chart, here's that 15-minute fair value gap entry. 5-minute fair value gap comes up. This candle takes out these highs. There's a 15-second fair value gap we'll see on the next chart. If you don't take this, there's a 1 minute fair value gap that forms, and you have 4 minutes to enter, possibly 5, before you get the larger run up. "15-second chart. Here's that earlier 15-minute fair value gap. Here's that 5-minute fair value gap. These lows respect this wick. If we put the fib on there, they most likely stay out of the lower quadrant. Anyway, bullish. 15-second fair value gap forms here. Entry, 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 stop loss down there. Takes these recent highs. 15-second fair value gap would be there. The 1 minute you saw in the previous chart. So here are your entries for those.